Welcome to Breaking News to Trading Moves. What if the biggest winners in this whole artificial intelligence build-out aren't actually the companies designing the processing brains?
Right, like the actual processors.
Exactly. What if it's the companies laying the physical glass and metal to connect them?
Oh, yeah. The plumbing, basically.
Yeah, the plumbing. Today we are looking directly at a headline regarding Cisco. The company recently raised its annual revenue outlook, and it's driven entirely by a sudden jump in artificial intelligence infrastructure orders.
Right.
So we are going to look strictly at this headline, connect the dots, and then map out the market winners and losers for you.
Yeah, and the numbers from this report, they provide a really clear map of where enterprise capital is moving. We are tracking orders from hyperscalers.
And those are the massive cloud providers, right?
Exactly. The ones operating those warehouse-sized server farms. Think of the companies that have the capital to buy, tens of thousands of processors at a time.
Right, okay.
So Cisco expects those specific infrastructure orders to reach around $9 billion in fiscal 2026.
Wait, $9 billion?
Yeah. And their prior target for that exact category was just $5 billion.
Oh, wow. That is a massive jump.
It really is. And beyond that forward guidance, their current networking product orders rose more than 50%, and their data center switching orders rose more than 40%.
Okay, so let me frame it this way for you listening. If the main graphics processing units, the GPUs, are the fast cars of artificial intelligence.
Right, the engines.
Yeah, the engines. Then we are tracking the companies building the actual highways, the bridges, and the traffic systems that those cars drive on.
I like that analogy.
Thanks. We are talking about the networks, the switches, optics, security. The numbers show clear demand spreading well beyond just the GPUs.
Absolutely.
So let's look directly at the market winners and losers here, starting with the networking and data center switching category. The market winners here are CSCO, which is Cisco. And then we have ANET, which is Arista Networks, and HPE Hewlett-Packard Enterprise. Let's get into the mechanics of this. If a company already owns like 10,000 highly advanced GPUs,
Yeah.
why do they suddenly need to overhaul their entire networking setup?
Well, it comes down to a mechanical bottleneck, known as the idle GPU problem.
The idle GPU problem.
Yeah, because when you train a large language model, you aren't just asking one single computer to process an entire data set.
Right, that would take forever.
Exactly. You divide a massive computational task across thousands of processing units simultaneously. And those units, they have to constantly talk to each other to share their partial results.
Okay.
In network engineering, they call this east-west traffic. So it's servers talking to other servers inside the same building, rather than, just sending data out to the internet.
Got it.
So if the connection between those servers is slow, or if a data packet gets dropped and has to be retransmitted,
And what happened?
your extremely expensive GPUs end up sitting completely idle. They are just waiting for data to arrive.
So you have a $40,000 piece of silicon doing absolutely nothing because it's waiting on a $50 cable.
Precisely. And that idle time is a massive waste of capital. Therefore, high-speed networking, specialized switching, and precision routing, they just become mandatory.
Makes sense.
Yeah, so Cisco wins directly here because this news validates their specific AI infrastructure push. Arista Networks, ANET, they benefit because they are a leading AI data center networking name.
They specialize in keeping the data moving.
Exactly. And Hewlett-Packard Enterprise, HPE, they attract attention as enterprise networking starts taking up larger portions of tech budgets.
Okay, but we know copper wire is hitting physical limits, right? When you push that much data through standard copper cables at those speeds, you generate heat.
Oh, a ton of heat.
And you run into electrical resistance, which degrades the signal. Are we really at the point where enterprise data centers have to abandon copper entirely?
For the most intense AI workloads, yes, absolutely. And the physical limitations of copper, well, that leads us directly into the second category of winners.
Which is?
Optical networking, interconnects, and custom silicon. The tickers here are MRVL, Marvell Technology,
Okay.
AVGO, Broadcom, and CIEM, Ciena.
Got it. So why optical specifically?
Well, because AI data centers require stronger bandwidth, lower latency, and just better optical transport. Cisco's strict focus on silicon and optics proves that demand is moving deeper into the supply chain.
Wait, let me ask a logical follow-up question here.
Sure.
Once data starts moving rapidly across these networks, how does the hardware physically handle those extreme speed requirements without latency issues, because the data is still being processed by silicon chips using electricity.
Right.
So you have to convert electrical data into light, shoot it across the room through glass, and then convert it back into electricity before the next chip can read it.
That's the challenge.
Who actually builds the machinery to do that translation at billions of times per second?
That specific translation process is where a company like Marvell Technology, MRVL, comes in. They have direct exposure to data center connectivity and custom silicon. Ah, okay.
And then Broadcom, AVGO, is tied directly to the networking chips and custom infrastructure that directs this volume of traffic.
Like traffic controllers.
Exactly. Highly efficient traffic controllers. And Ciena, CIEN, they gain because increased AI traffic demands more optical transport. They manage the long-haul optical networks.
So if you replace the copper with glass, you solve the speed issue.
But I have to challenge this a bit.
Go for it.
Moving enterprise data around at the speed of light, if all this cloud traffic is moving faster and workloads are expanding, doesn't that inherently create massive vulnerabilities and risks?
Well, absolutely. It creates a terrifying new vulnerability.
Right. The old model of building a digital firewall around a corporate office is dead.
It is entirely dead. The speed and distribution of these networks demand an entirely new security architecture. Modernizing networks creates a critical need for protection across endpoints, cloud workloads, identity, and traffic.
Okay, so that brings us to our third category of winners: cybersecurity and enterprise AI infrastructure.
Yeah.
The names here are PANW, Palo Alto Networks,
Yes.
CRWD, CrowdStrike, and ZS, Zscaler.
Spot on. So Palo Alto Networks stands to gain from overall security consolidation.
Because nobody wants 30 different security vendors to manage.
Exactly. They want a single, cohesive platform. Then Zscaler, ZS, they benefit from the adoption of zero-trust security.
Okay, zero trust. I hear that term constantly. But mechanistically, how does it work in an optical data center?
So think of the old model like a bouncer at the front door. Once you get inside, you can wander into any room.
Right.
Zero Trust puts a bouncer at the front door, another one at the elevator, and a third one checking your ID every time you open a file cabinet.
That sounds intense.
It is. Every single request must be verified. And CrowdStrike, CRWD, they stand to gain from direct workload protection demand. Because these cloud applications, they aren't just sitting statically on a hard drive.
Right, they spin up for 5 seconds and then disappear.
Exactly. CrowdStrike secures those active, constantly changing environments.
Okay, let's pivot the conversation here. Corporate IT budgets are finite. With market budgets reallocating toward fast-moving AI, hardware, and security, money is rotating away from other areas. Where are traders pulling their attention from?
Well, the first category of losers is slower growth enterprise hardware and storage.
Okay, the tickers here are HPQ, which is HP Inc.,
Right.
NTAP, NetApp, and WDC Western Digital. Why are these names facing pressure?
So HP Inc. is heavily exposed to PCs and printing. And those areas, they just currently lack the momentum seen in AI networking.
Because it's a zero-sum game. If you need $2 million for switches, you delay the employee laptop upgrades.
That is the exact mechanism. Capital flows to the operational bottleneck. But for NetApp and Western Digital, it's a bit different. They face pressure because they still need to prove that AI storage demand will eventually translate into stronger growth and larger margins.
Right, because right now, buyers view standard storage as a necessity, not the immediate bottleneck.
Exactly. They are buying processors and networking gear first.
So, pointing out a specific detail from the main headline, Cisco is actively cutting jobs while simultaneously directing investment toward artificial intelligence.
Yeah, that's a key observation.
Does this mean labor-heavy businesses are suddenly at a disadvantage?
Yes, investors are really questioning whether large enterprises are redirecting their budgets away from labor-heavy services and putting that money into automation and infrastructure.
Okay, so our second category of losers, IT services and consulting names. The tickers are ACN, Accenture, CTSH, Cognizant, and IBM.
Right. Well, Accenture, Cognizant, and IBM all have AI strategies. The market is currently separating physical AI infrastructure sellers from traditional consulting models.
So even if you need consultants to design the architecture, the market is looking at where the heavy capital expenditure is going right now.
Exactly. When corporate budgets tighten, billable human consulting hours are frequently the first line item to get reduced. Hardware provides immediate, scalable computing power.
Okay, this last category of losers really surprises me. We're looking at AI software names with less direct infrastructure exposure. The tickers are CRM, Salesforce, ADBE, Adobe, and NOW, ServiceNow.
Yeah,
Why would they lag behind the hardware? I mean, software companies are the ones actually delivering artificial intelligence tools to the end users.
they are, and these companies are not necessarily weak overall, but in the short term, traders clearly favor physical AI infrastructure names.
Because of that sequencing factor again.
Exactly. The Cisco update strictly proves demand for networking, switching, optics, and security. Software names, on the other hand, still need to prove that their specific AI features are turning into paid adoption and actual revenue growth right now.
I see. So an enterprise buys the networking gear today, sets up the servers tomorrow, but it might be next year before they actually start paying for premium software subscriptions that use those capabilities.
You nailed it. Traders want to be positioned where the revenue is actively hitting the balance sheet today. Until those paid adoption numbers materialize for the software names, the momentum remains with the hardware builders.
Okay, so let's summarize the core lesson here for everyone listening.
Yeah, the takeaway is that the artificial intelligence trade has officially moved into a second phase beyond simply GPUs. The money is moving into switches, routers, optics, custom silicon, cybersecurity, storage, cooling, and full data center architecture.
It's all about the physical hardware build-out.
Entirely.
So I want to leave you with a final thought to ponder on your own. Will this massive physical hardware build-out eventually hit a bottleneck if paid software adoption doesn't catch up to the infrastructure? Or are we just witnessing the very beginning of a multi-year architectural build?
That's the big question.
It really is. This
Yeah.
is not financial advice or buy or sell recommendations. This is purely the opinion of the author.